And we're back Tuesday, June 17th. Welcome.
Good morning, Frank. How are you?
I'm going pretty steady here on Tuesday, synthetic Thursday before synthetic Sunday.
I'm glad I don't have to deal with this calculation.
What are we calling Thursday of this week synthetically?
We're getting a synthetic Saturday.
You're calling it synthetic Saturday.
That is what Thursday is, correct.
Well,
so
because
tomorrow would be Friday, and then you get another Friday. It goes synthetic Friday, Saturday, synthetic Saturday, real Friday, real Saturday.
Okay, all right. Because I only ask because it's a big point of contention for traders. I feel like around like 4th of July obviously is always a random day. Juneteenth is always a random day, and it begs the question of just like Memorial Day or Labor Day.
You know what you're getting.
You know what you're getting.
A short week, Monday off.
With this, I'm trying to just navigate where my head should be at. It doesn't feel like synthetic Thursday. I'll say that.
Not at all.
And you are on some kind of synthetic.
This is synthetic Thursday, and it feels like it.
You're feeling good because
Friday.
You're blasting off to Denver tomorrow. And listen, I don't want to pretend to know what it's like to be a black person in America, but you commented that you're going to Denver to celebrate Juneteenth. Of course, my next question was, what does the group look like? And what are the activities for the celebration? So I think you should take us through it.
One, I didn't say that. I said because we get Juneteenth off.
Okay. Who's we?
Our company.
Okay.
Since we get to celebrate an Emancipation Day or Juneteenth.
Very much worth celebrating.
Correct. I have taken that day off to make a long weekend for myself, visiting some friends out in Denver.
It feels. Does it feel weird? I'll ask you.
I wouldn't say it feels weird. No.
Okay.
But you making a
doesn't feel weird at all.
Bigger deal out of it feels weird. Yes.
Okay.
So you won. You got what you wanted. What are you doing on your day off?
I am. See, I don't know if there's a good answer to the question. My girlfriend is going to the beach with her friend, and I'm going to play tennis with Clink from the office. I don't know what to do. We should research what we should be doing.
We will make better plans.
Because I can't help but feel last year over Juneteenth, I did have the feeling after the fact, like, oh man, this would have been a nice little time to like rent a house up in Wisconsin or Michigan or something like that and have, like a long Midwestern weekend or something. But then because I have both white guilt and Catholic guilt going on. And so my
no Italian.
That is, it's Roman Catholic.
Okay.
Most Christians, not a lot of guilt,
Okay.
I think, going on, but the Roman Catholics.
Strong.
And that kicked in and was like, no, actually, I don't think it makes sense for me to plan a vacation for next June. There's something weird about being a white dude and being like, ooh, like, when's the next Juneteenth coming up? I'm gonna jump on Airbnb. But
yeah, you'll jump on the rental website for a tennis court. That's better.
In my mind, it is. I don't know because I'm not going anywhere. But anyways, all right. Well, I'm glad we got that out of the way. Let's get into the platform because it's not getting any better than that. I
mean,
a lot of zeros. What is going on with the zeros?
An interesting point. With the zeros on the swap bid and the swap offer, we've got, because of the holiday on Thursday, we had a funky two-day roll yesterday in most U.S. dollar pairs. So your indicative swap bid and offer giving you kind of an approximation of what the overnight funding charge would be if you're holding a position overnight. Yesterday, you had 2 days of roll in there to account for this Thursday.
Gotcha.
U.S. dollar, Canadian dollar, because of our close proximity as one of the factors, is able to operate on a T+1 instead of all of these other pairs are T+2.
Interesting. So USD CAD is actually showing that's 2-day roll.
This is 2-day roll
for Wednesday, Thursday.
Correct.
Gotcha.
Whereas all the other pairs, that was already priced in.
And if you had checked yesterday, you would have seen all of these pairs showing 2-day roll.
Correct.
For Wednesday, Thursday, but yesterday. But since USD CAD is T+1, it's showing that 2-day roll now. And this is, some interesting stuff that you do have to. I know are joking about. That sounds bad. Not joking about Juneteenth, but are joking about the holiday is obviously meaningless. But what is meaningful is around these holidays, the overnight funding can get kind of wonky, and especially if you're looking at sometimes there will be like Japanese holidays that are like those dudes are like taking off like 5 days in a row, right. and you can see some crazy rolls in there. Again, nothing is like free or riskless, but people will jump into a position and take it overnight, maybe try to scratch the position later on that night or the next morning, or at least use that edge in their favor if they are getting 4 or 5 points because it's a 3-day roll or whatever. Something interesting to watch, but yeah, the unusual Monday night juiced swap bid and offer because of the Thursday holiday. But that's why you're seeing the zeros there. You're also seeing a handful of unchanged, although we're starting to see some stuff shift around. I want to go to the commodity currencies, but let's start actually at euro dollar because I want to cover yesterday's action all the way up above 116.
Very briefly.
And for a second there, though, I mean, that was a hell of a rally in the U.S. morning. You go from, the first handful of green bars are European session kicking in, and then you extend through to the U.S. morning there right as U.S. equities are opening, and we rallied all the way up to 116.10 and then change actually above there. And for a second there, Glenn, it looked like they were going to put in 100+ points on this market to start the week. Took it all the way back to 115.50 by last night. And now we're kind of surfing around there. Another nice, I know that this is an extreme here, 116 for the last year or so of trading. But if you're willing to step in front of some of these, 50, 60, 70 point moves, really in either direction, the pullbacks as well, you've gotten some nice reversion around the 115 to 116 range.
Agreed, but very notably, these lows, definitely higher lows here. The pullback not to the same extent where we even opened the week, and the run up on the European session. So this is where we were looking at it yesterday during the show, a little bit of consolidation. We were wondering if the top was in, or if this market had more room to run, then picked up a lot of steam all the way back, but not where we ended around where we ended last week, around 115.5. But definitely surprised that the U.S. dollar, even when, like we had yesterday afternoon, dollar starting to gain momentum, especially against some safe haven currencies that we'll look into, and this euro dollar across the board. Okay, dollar, here we come. Not to any great magnitude.
So it sounds like you think the risk is in this pair to the upside, that you think the risk in dollar is to the downside.
That's what the tape action is showing you, is that there really isn't, there hasn't been much sustained dollar buying. I mean, last week, Thursday, you get it, and this was probably the most continuous dollar selling overnight. That's it. Once the U.S. came in, reestablished back well above 115. I don't know. Are you seeing something different? I can give you more room to run
I,
here.
I have, of course, no clue. But what I will say that is interesting to me is 116 is looking a lot like 140 if you're comparing euro dollar to dollar yen. And what I mean by that is, man, they keep trying to press 116 and they're not really able to make it happen. I start to wonder, is this you look at this daily chart and it's like, man, we got up here a month or two ago, unable to build any ground. I mean, that was a hell of a rally, so I don't want to necessarily be like, oh yeah, that was nothing crazy. But I just can't help but think about dollar yen over the last 4 years, and we'll pull it up in just a second because it also was an interesting move yesterday. And then look at on the daily chart here, if you just zero in on the last 5 days, that is some pretty wonky trading around 116. Really tried to get up there and unable to do so, settling right back in to the 115.50 area. Obviously, we have a FOMC in a little more than 24 hours. That'll probably let us know
Something.
where the risk really is in this dollar for the rest of the week. But yeah, it whenever we get up here, everybody talks about, dollar is effed, Trump is trying to take the dollar down, everything else. A lot of that's warranted, sure. That's how we got here. But at some point, these stories and some of these things run out of steam. And if you're looking at the last 5 years of trading, you can't really make a case for this market extending much further than where we are now. And let's jump over to that dollar yen just because, one, this was an interesting one that they really tried to rally yesterday afternoon and night and got all the way up above 145 again. And bounced right off of it. We're trading 144.50, so not super far off there, but you can see dollar getting some pressure going into today's U.S. Open, just like yesterday. But Glenn, if you go to the weekly on this and we get some data in here, I think the peeps might see what I'm talking about. So especially the last 2 years, let's call it, 2 solid years, where we have turned on 140 like a dime. And every time that we've gotten down to 140, the story has been, the dollar, the carry trade's unraveling, all of this stuff, the dollar is over with. And I'm not necessarily trying to build a bull case for the dollar. Right. But in my mind, if I'm going to really just focus on the numbers, I'm not the news guy, I'm the numbers guy, there's not a lot of data points to support this dollar market completely falling apart. It's already bounced off of 140 here against the yen. And so you already have a little bit of like dollar firming up in this market. That euro dollar market, again, printing 116 yesterday might not feel like, oh man, like the dollar's finally rebounding here. We're still a little bit in no man's land. There in the pound market, we're absolutely in a little bit of no man's land.
Still testing those levels.
But again, this is a scenario of like this market has to show me that we're getting into a new area before I say like, oh yeah, the next print is 120, which I think a lot of people are thinking. Sure. This is just a way station, so to speak, on the way to 120. So yeah, it'll be interesting to see the reaction around the FOMC, to see if there's any kind of like thin market big moves before there. Maybe they try to get up to 116 again today or tomorrow morning.
But also wouldn't be surprised if there was some consolidation. A lot of the news we're going to get that isn't headline is going to be early morning. We have this G7 summit, all the world leaders, maybe some trade talks. land out of that. I know Trump does not hesitate to steal Jerome Powell's spotlight, so wouldn't be surprised if he doesn't care about the timing around an FOMC decision. We had a Bank of Japan interest meeting last night, so
totally forgot about it.
Right, right here. As
looks like the market forgot about it as well.
I think so. But, we had some consolidation into the meeting, and then some back and forth. But I imagine we had a rate hold at 0.5%. So the first major central bank meeting of the week. Today we've got retail sales coming up in about 42 minutes here.
That'll probably be interesting.
I think it will
Some
be
of
interesting.
these
Maybe
U.S.
for the
numbers
equity
have been
side.
sneaky.
Yeah,
Yeah.
More so than the dollar side, but it is the last data point we're going to get before this FOMC meeting tomorrow. We also have UK inflation, which aligns with
Bank of England on
Bank
Thursday.
Of England on Thursday. Also have the Swiss National Bank, which usually isn't a headline story, but they are the only one of the 4 banks this week looking to cut.
Oh, Clink's gonna love this.
0. So we've been looking at dollar Swiss franc for
The carry
past
trade there's
couple
been
weeks.
interesting.
It's been interesting given the actual product details and how much of a position you can control with the same amount of capital. This dollar Swiss franc carry outweighing dollar yen carry, positive carry that is, if you were long either of those markets. So this is definitely one to watch. But as we set upon a heavy slate of economic events for the week, wanted to jump over to the slides. We've got some interesting, more of an evergreen concept here.
Sure.
As to just get your gears turning as to what really to consider, how to trade economic events using FX, because the main reason we look more heavily around macroeconomic data points is when you're trading FX markets, you're trading a country's or a region's currency, and you have a lot more of these data points, these central bank meetings, inflation reports, employment data, all of these things on both sides of a currency pair. Every currency pair you're trading 2 distinct regions,
Sure.
each of which have their own economic dynamic. And so you're getting a lot more opportunity in these FX markets to speculate and take advantage of volatility.
Well, the correlation is pretty direct between major economic data points and the currencies of those regions, the Forex pairs that incorporate the currencies of those regions, as opposed to, what does the interest rate decision mean for Apple stock?
Right.
It's like, well, Apple has a bunch of different stuff going on that diversifies them away from interest rate action, whereas the U.S. dollar supply and demand dynamics largely dictated by U.S. interest rates. And then if it's U.S. dollar against the euro, yen, Swiss franc, whatever, of course, their interest rates come into play, their employment data comes into play, their inflation data comes into play. So it can make for a very, like I say, direct correlation. No longer is it like when you're trading S&Ps around some of these events, it can feel like, okay, well, what is the context of the stock market going into this event? Do we want rate cuts? Do we want rate hikes? Is it
Good
bullish,
news, good
bearish?
news.
it can be murkier, whereas in FX it can be a lot more direct. And yeah, as you see, usually the Fed meets around the same time as other major central banks, which is in the mode that we're in currently, can be a really interesting time to be opening, closing positions, doing whatever you're doing.
Absolutely, and that begs the question, we see these events, what do we do beforehand?
Load up. No?
That is absolutely a possibility.
I'm
you are
joking.
Free to speculate on, in your account, but you have a ton of options. But regardless, it's worth noting little X on your calendar, little reminder that this more than likely will be a volatility event. Could fundamentally change the dynamics of a product that you're trading, and so it's worth considering all of these, your existing positions. If you want to retain your bias in existing positions, if you want to shave some off, and asking yourself if you can withstand if the market moves completely against you. Worst case scenario, are you still comfortable going into a volatility like event like this? You can close everything to maintain flexibility. I think our good friend Peter, who's on the show with us a lot, he is a big proponent of trading the reaction and not the headline number,
Sure.
not speculating going into it. But you absolutely can speculate on the event itself if there are, you feel an appropriate entry pre-event, good prices for what you think will be the outcome of any of these data releases or events to get in, but with perhaps a smaller position size because of the increased volatility.
Of course, I'm being facetious about loading up before the event.
Or are you?
Absolutely, because and Pete was taught the same way 50 years ago or whenever the hell it was, and I was taught the same way 10 or so years ago at the Board of Trade, which was that, like, going into an event like this, you have no clue necessarily what's going to happen. The one thing that you can bank on is there's probably going to be increased volatility. There's probably going to be a big move one way or the other, or hopefully, a lot of people hope that there's big moves in both directions.
Sure.
And so with that in mind, we were always conditioned to maybe flatten most of your positions, if not all of them, going into something like this, and actually not necessarily use stop. Of course, you could do whatever you want, but I wouldn't necessarily hold a position going into an event like this and put like a tight stop loss on it.
Sure.
Just because the increased volatility, reduced liquidity, you could get whipsawed. Two, you could see a large move and reduced liquidity and end up getting out of a position at a worse level than anticipated. So with all that being said, what we would do a lot of times is go in with maybe less risk. If you do have a lean one way or the other, of course you can have a position going into an event, like to your point, speculate on it. But we would a lot of times look to enter positions far away from the market. Look for that like whipsaw move to be an advantageous move for getting into a position. Because, yeah, you're probably going to see, if you're used to seeing 50 points on a given day, maybe you'll see 60, 70 points off an event like this.
Absolutely, and good call out with the stop loss, because what you're going to get more often than not is of an initial jerk reaction. And for retail traders, perhaps waiting for the market to digest this number. Even right now, what we have on the screen here is a 1-minute chart. And you can see a snap reaction for, I believe this is non-farm payrolls this month. Snap reaction, not what it shook out to be even 3 minutes later. And so what you are getting here is a lot of unique price points, but no need necessarily to try and, the number comes up on your screen and get in as soon as possible.
Sure.
Because there are a lot of participants here, spreads can widen, and algorithmic trading can be a large part of that initial move. So just taking time there. And then after the market has digested it, a lot of post-event entry strategies, to your point, that might be even more advantageous than holding a position going into the event, can really do whatever you want here based on your thesis or your bias. Breakout continuation, following trends, fading the overreaction, which can happen very quickly, or within 30 minutes we can see things turn around. And then range trading, if there is a lot of back and forth throughout the rest of the session, like FOMC happening in the afternoon, you have probably two hours about of equity trading there after the event. So whatever you want to do there, right?
Absolutely. Yeah. I mean, it really comes down to what your normal strategy is or what your gut reaction is or whatever you would normally do. This is just like that. It's just going to be a little bit more volatile and maybe have, a little bit more of a last. Another big thing was that we would always think about, especially with a Fed event, always on a Wednesday afternoon, right? Would not only be, okay, we only have a couple hours of increased liquidity before the U.S. participants leave the market, but there usually is either a furthering of that move in the overnight and into Thursday's U.S. session, or a reversal of that move in that that volatility isn't just with a Fed event, a big event like that, just like 5-10 minutes and then it's over with. It can shift a lot of global dynamics and have some lasting effects the next 24, even 48 hours.
So yeah, a lot to consider, and that key point there on the third bullet point is determining your time horizon.
Yeah.
Don't want to be stuck in anything that you didn't anticipate being stuck in for a longer time than you expected, but might be worth holding overnight for something.
Whatever you normally would do. Yeah, the last thing you want to do is say, I'm trading this as a day trader or even a swing trader for 24, 48 hours. And then it's like next FOMC and it's like, oh man, I'm still short euro dollar. And it's like, why? Well, I didn't get out last FOMC. And it's like, that's not usually how we manage positions.
Right. So there you have it for how to trade economic events using FX. And that'll do it for us today on Forex Focus. A lot of trading ahead. So stay tuned for Tom, Tony, and Vanetta next on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it.